The unemployment report was underwhelming. Inflation's going up, but banker Bill says the economy's red hot. It's running at terminal velocity. Is the economy waiting for voters to catch up, or is this the best it's ever going to get? This is it bad for the economy?
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things that way. There is a period of transition. It takes a little time.
Thanks for listening to Is It Bad for the Economy? My name's Kobi Tirey, Democratic strategist, trying to figure out how Democrats can get the credit they deserve for outperforming Republicans on the economy for my entire lifetime. And telling us what bankers really think of Donald Trump's policies behind the scenes is the anonymous banker Bill, doing some great work at a bank you've definitely heard of. Let's get right into it. Banker Bill, you told me as we were getting ready for this episode, the economy was running at terminal velocity. What do you mean by that?
I see GDP growth is 2.7% on a after inflation basis year over year. That means that the United States grew by the GDP of like Ireland or like of Belgium. I see unemployment under 5%. I see underemployment, so the U6, the number that I track, comfortably under 8% going into the summer. I see our protein basket of ground beef, chicken breast, pork chops, and eggs at the lowest it's been in a year, down 7% in the last year. And I see inflation that is coming in above target. So all that points to a very strong labor market and economic conditions.
Well, first, the unemployment numbers we got a day early because of the holiday.
Right.
The headlines said they were underwhelming. I assume you're once again going to tell us the medium trends are moderately positive.
Yeah, the trends are good. So U6, 7.9% for June. That is the sixth straight month of it coming down, right, of a downtrend. The high was 8.7 back in November of last year, and we've made a straight line down since. I was very concerned on the trend, prior to the 18 months of rising from 7.4% in June 24 to November 25, 8.7%. I think much of that was driven by the tariff rhetoric. Once there was some level of stability in that regard, I think that gave some confidence for companies to enter back in and let jobs come back on. Reducing unemployment rate, you reduce U6. 7.9% on the U6, that's pretty good. I mean, that is not a condition where you should be concerned at all. The bugaboo here continues to be inflation.
You're talking about the U6 number, the U3 number that usually gets all the headlines. That went from 4.2 to 4.3, right? And I think, again, that's the number that people are underwhelmed by. You like the U6 number because it also includes the number of people who wish they had a better job, who are applying for a better job.
Or could be trying to get more hours and can't, right? Underemployment. And so, yes, we include all of that. I think that is a more reasonable picture of the labor market that tells you actually how strong the consumer, the American household is based on the type of job that they have. The U6 tries to incorporate that. And I'm sharing for you on the screen that the trend is moderately higher. But at 7.9%, I can tell you that's just not a level that you should be concerned about. You look at jobless claims over the last 2 years here. This is the 4-week moving average of continuing jobless claims. So these are people claiming employment back-to-back weeks, right? So we're at 1.8 million people. We're off a high of 1.9 million in, again, November of 2025 last year. And we've come straight down since then, right? Obviously got a little weaker into the summer now. Some say that that's seasonal. I don't know. I wouldn't read too much into this. This may be some mean reversion, okay? But again, this is just confirming for you the jobs picture is generally okay, stable.
We've been saying for the longest time that the unemployment market is no hire, no fire. If folks are coming off of unemployment, does that mean we're finally putting a dent on the no hire part of that?
Yeah, so this chart's definitely showing you that the people that were long-term unemployed have found jobs in the last 6 months. And you see the trend higher in the U6. I think that's telling you that, hey, the jobs that those people are coming into are maybe worse than the prior job that they had. But yes, I mean, this is definitely showing you as we go into the summer, the people unemployed for long-term, right, back-to-back during unemployment is going down. That's a good thing.
You see the U6 is going down as being a good thing. I saw a lot of people cherry picking the jobs report that temporary jobs hadn't gone up as much as they thought they would, and that service jobs hadn't been going up as much as they thought they would, and that showed bad consumer sentiment, both because of historical trends and just because people should be hiring to meet demand in tourism, people going on vacation, everything like that. It also, begs the question, is the World Cup, has that been sort of an economic dud? You've been saying for a long time that was going to be a nice pop.
It still could be. We'll see about that. I mean, the U6 was 7.8% in July of 2024. It's 7.9% now. Labor force participation rate, employment to population ratio for the working age 25 to 54 continues to be near all-time highs. I know the jobs report had a weird drop in that. I think that's going to wind up being an anomaly and will be revised. The data point is too bizarre and is not corroborated by other data points that we got. But yes, I would also tell you too that somewhat this is expected. I mean, you have the one big beautiful bill coming through now. You had the tax returns, much of which maybe for the bottom 80% were eaten up by the rise in fuel prices. But so too, we have the rise in capital expenditures by companies pulling forward CapEx spend based on the tax laws in the bill. This is full go. The government's running a 6% deficit, which is an economic tailwind for growth, but also a inflation headwind. And, that's why the growth picture is strong, but the inflation picture is still high.
And I think that's the question, right? We're doing the same thing that we've been doing for the last 5, almost 6 years now. People like you get on podcasts like this one and say the economy is great. What is everybody complaining about? You're obviously have not said the second half of that statement. I think the answer is inflation. I think that magically, somehow, just purely by chance, the Fed lucked upon exactly the right threshold for when people get nervous about rising prices, that 2% target. And as long as we're straying from that, people are going to underestimate the economy, feel like they got to get what they need out of this economy because it's about to fall off a cliff any minute.
Yeah, I think that's exactly what's feeding into these references of, the casino economy, right? The YOLO economy, whatever it is. So now what I'm showing for you on the screen is the U6 versus PCE year over year.
PCE is an inflation metric.
Unemployment goes up, inflation goes down. Inflation goes up, unemployment's coming down, right? These things are tied together. And people on the left or right who say that these things are not tied together, they deny the economic realities that we live.
And the good news is stagflation watch is officially over.
Yes, I think at least for now. I see a strong labor market, a strong economic growth picture, and persistently elevated inflation. I don't think you see 2% inflation during this administration.
So if we're going back to people watching their 401ks continue to increase in value while their wages, continue to dance in between being just above or just below overall an average of rising prices.
Stall speed. Call it stall speed. Yeah.
Do you think that sentiment is going to change at all? Is it going to catch up to the economy? Is it finally the good times are going to trickle down to everybody and everybody's going to lighten up a little bit? Or are they going to continue to feel like the economy is worse than the big numbers are telling us because just those prices keep going up?
Now, people are going to continue to be pissed because they feel that they should be rich nominally, and they don't feel it in their day-to-day lives because costs are going up. And when they try to go someplace that they feel should be exclusive because a whole lot of other people also now have money, that event doesn't feel as exclusive, whether that's a concert, whether that's a fancy picture in some Latin American or Mediterranean country, whether that's a dinner somewhere. These are all flowing through into the economy that we live every day.
Well, I don't think we need to start pulling examples from credit card rewards commercials. People just don't feel like they're making as much money as they should for how hard they're working.
Yeah. What do you want me to say about that? Want me to editorialize? Back to you. Are people going to give this administration credit for bringing prices down on the protein basket, for example, 7% year over year? Or are they going to hold them accountable for raising prices, whatever they are, 8% versus 2024?
We're right at the threshold in which the election picture could change. I don't think October surprises do nearly as much as, in the hyper-partisan era in the here and now as they used to. But I am worried that, Trump can do just enough because so many of these problems are self-inflicted. He can do just enough in terms of dialing them back. He's able to make it close with the gerrymandered map, with all of the shenanigans they're going to pull with voting, with mail-in voting especially. The things they're saying out loud that they're going to do in that regard are already just so chilling with this threat to not deliver mail-in ballots from states that don't hand over their voter rolls.
Look, are these guys going to be held accountable for these charts?
Right.
Here's the average price of electricity over the last 2 years. That's call it 20 cents per kilowatt hour, up from 17.5 cents.
Yeah.
Here's gas, natural gas. Here's your 30-year fixed mortgage rate. Oh, it's down. It's down. It is down. It's down from 695 to 640. That's not an inducement to get people to buy a house. That's why the housing market's locked up. I think that's what it comes down to. That's what 2022 came down to. And it's what the Democrats are voting on right now. I mean, embedded in the elections in New York with the rent freeze, okay, is the mortgage rate chart I showed you. Beyond stuff we've talked about with Ted Fear, right? In other places where you see these DSA candidates getting notoriety, embedded in that is the increasing price of electricity by way of criticism against data centers. Do you think there'd be all the same criticism against data centers if electricity prices were actually falling rather than going up at a 7-8% clip per year? Probably not. This is it. And no one is meeting the moment to address the inflationary factors in the economy, which, I mean, the biggest elephant in the room is the deficit spending. 6% deficit to GDP for the Trump administration this year. That's the same deficit basically that they ran last year, the year before that. It's just like year 6 in a row of 6% or higher deficit. Again, that's a growth tailwind that supports economic growth, but it is an inflation driver. It should be obvious why that is, I hope. So anyway, go ahead.
No, the K-shaped economy lives on. One thing that stuck out to me this week, and a lot of the alarm bells that some of the folks are ringing about the AI market, a potential AI bubble, is this idea that Silicon Valley is out of, quote, hyper growth ideas.
But fundamentally, large language models are not the future. The only reason big tech is investing in this is that they've run out of hyper-growth ideas. They don't have a next iPhone. They don't have a new Google search. So they've put over $1 trillion with trillions more to come into a kind of a dead-end industry because when that ends, they'll have to admit that they don't have anything else.
So you think AI, LLMs overall, is a dead end? You see no business model here. You see no utility from AI whatsoever.
I see this as in the future as a boring hardware-based business, the kind of the Oracle licensing hardware model. I think this is a $10 to $30 billion TAM industry pretending to be $1 trillion one. And because everyone's propping it up, because they have no hypergrowth ideas, everyone's just kind of pretending it's the kayfabe of the tech industry that really has run out of ideas.
There was a time where I thought AI could be what the whole Web3 bullshit was. We're well beyond that, right? That whole Web3 thing lasted, 18 months, flamed out, was absolutely nothing. Sayonara. Meta lit so much money on fire, changed their stock ticker, changed their name on All In, right? Blew it up. Now you have this AI thing, and I think where we have to move on from soon is AI improving the public good or filtering directly through to the bottom line of specific companies. Because if it's not going to improve traffic flow so we can get to places quicker, or it's not going to make a factory floor worker be able to do something 10% quicker without any more risk to them or any more real work output from them, then we don't really need something that's just going to vibe code or build more presentation decks. Right? I think that's the biggest risk. We have to reach the jump point where we start solving either problems of the public good or direct economic or business profit from, the companies themselves.
If you're telling me that LLM technology has found more practical uses than cryptocurrency, then obviously I have to agree with you. It has value to offer all of us. That has nothing to do with how these companies are being priced and how they're being priced into our economy. That's being done in terms of projections that are tantamount to sci-fi stories.
Yep.
And if this AI thing turns out to be a bust, which is not the consensus view, but is...
What's a bust for you, though? Like, you got to define that for me. I'm not trying to be difficult.
A bust for me is that the big establishment players that have invested big on AI do not see a return on their investment, the Metas, the Googles, the Microsofts, that companies like OpenAI and Claude and Anthropic go the way of, an AOL.
Yeah, that's specific enough.
And then let's say we raise taxes because we have to raise taxes to close
to deal with entitlements.
And then now corporate America has lost its two biggest strengths. The two biggest things that were causing people like you to say were at terminal velocity.
I mean, you want to go doomsday? It's possible. All this capacity ultimately goes unutilized because the U.S. economy can't monetize it because it's too old. Demographic picture gets too negative. You start to get a deflationary spiral. Right, property values go down, something like that. But that could take years. I don't think that's a flash kind of thing that just blows up in your face.
Well, it doesn't need to be a flash thing to be a problem for the American worker, the American consumer. And I think when you say it like that, it sounds crazy. But then on the other hand,
No, that's a crisis. Those crises happen. I actually want the AI growth story. I want this to hang around for at least another few years so that the real heavy infrastructure stuff like lines, transmission, power plants actually get built and come online such that if this is a bust, right, where if we are living through right now, 1996, 1997, I want another 4 years to go so we can get this stuff built. So from the ashes of it, if it's a bust, there's all these power plants, transmission, and energy that we can utilize and have additional capacities such that energy never becomes a political flashpoint for the rest of our lives because it's not an area of high expense.
I mean, all of a sudden, it would start looking like history was going in the right direction.
I mean, the worst case scenario would be this all falls apart in the next year because then you're in a sunk cost. You built a quarter of a power plant. You're not going to finish it. That's bad. So my point is the AI story. We need to hit a jump point where these AI products are benefiting the public good, right? Whether that's curing cancer or just improving traffic flow, or has to drive through to the bottom line of companies to make employees more productive. Right, and ultimately flow through the profit margins. If it doesn't, it's bullshit. We have examples wherein this technology has an opportunity to create mass benefit, whereas we've seen other loss-making companies or loss-making industries over the last decade or so rise up out of thin air and become profitable, such as, rideshare and food delivery. You asked me 10 years ago if I thought Uber would make it or that DoorDash would make it. I probably would have told you no. Or maybe that one of those companies would make it and they'd have ultimate monopoly power. But still, Uber has competitors. Still, DoorDash has competitors. And now that industry is profitable with its own, moderately small market cap. Maybe AI becomes that industry, the delivery market industry, right? Or does it become as big as the entire pharmaceutical sector?
Okay, but the entire financial world is treating them as a too big to fail investment, to the point where I don't think I think maybe some are overexposed to this theme. I don't think the whole finance world is saying that this is a too big to fail industry. If all these companies went belly up tomorrow, we'll all live. We're not gonna have a 2008 moment. It'll suck for a whole lot of people, but I mean, and it won't really suck for the bottom 80%. How could it not suck for the bottom 80% if it already sucks for the bottom 80%, and the only thing they have going for them is the fact that their 401ks are going up?
And I mean, I'm referring to like the 2001 or really any economic recession where inequality falls,
right,
when you have a recession.
But they haven't recovered from those lows as much as people had been previously.
No, that is true.
I absolutely do see there being too big to fail forces here. Although if there's any counter argument to that, it's the bond investors that Elon Musk went to right after the SpaceX.
Has not gone well. It's not as easy to name your terms with bond investors as it is with your investment banker. Not as easy.
So big picture though, are we seeing the SpaceX moment as the big win for Musk that he's making it out to be?
Oh, for sure it still is. And remember, there's only 4% of the equity floating on the market. You could see a lot of volatility in the share price. And you have already. Isn't it back down to the original IPO price or below? I don't rate bonds, but I was surprised to see that the ratings agencies gave SpaceX an investment grade. So he got what he wanted there too. But then actually selling it to investors, proved a little bit more difficult.
I just don't buy this argument that there is money out in space. I think that, stuff like space mining, things like putting data centers in space, your ability to do that more efficiently on Earth is always going to far, far, far exceed the incredible risks and unknowns of something that you can't fix and you can't maintain without doing extraordinary feats of heroism in aviation.
But there's investors who do think we actually can do everything you just said we cannot. And that's why money's flowing to them. People are risk takers. There's crazy sons of bitches out there. I try to make it a little bit more reasonable where, look, I'm saying, hey, this AI stuff, it's got to come to a jump point where it improves public good or profits and not just DEX.
The thing that frustrates me is that in this conversation, you're saying inherently there's value there, so it's going to be positive. So this is rational. But if there is a crash, which again, less than 50% chance, but too high for comfort, I'd say, if it comes, you're going to say, well, of course there was a crash, because it's not about the objective value that this product brings to the market. It's about the difference between the value that it brings to the market and the financial speculation that was put onto it, right? And so I think, so like, if the question that I forever have for this podcast of what is the best mental shortcut that I can use that's going to allow me to figure out whether I'm voting for a stronger or worse economy for me, I don't think it's particularly value to point out that things have potential value and then be like, well, the dummies screwed up how much potential value is had on the back end. I think that for Americans who are trying to figure out whether they should give these data centers a chance because they want to make sure we don't fall behind China, or whether they should give in to their, gut instincts and say, screw this, AI is nonsense. This data center is only going to steal money from me. It's only going to be send my electricity higher. And if nobody can look us in the eye and make this argument with their full chest in a way that makes us feel like they're genuine and sincere, then now when we're at this pivot point where the American people are going to say whether this economic experiment is going to continue or not, when they decide whether data centers are going to be built in their communities, we're setting up a situation where people are never going to vote for this because they don't trust it. And
they should. And they shouldn't give it a chance either, just because China could win a race that may not be worth winning. This is where I'm coming back to it. People have to be selfish about this and be able to start pointing to instances wherein, they've derived a direct benefit. Is this getting me to work faster? Is it getting my healthcare visit better or cheaper? Is it improving air traffic control so I can get to the beach or to my mom faster? And if it doesn't start making those things, then it's malinvestment.
Banker Bill, we don't get to decide those things. It's people like you get to decide. And we, as the people who are looking at this stuff in our everyday lives, are looking at the value it's bringing there and are looking at people like you going, what are you guys talking about? When are you going to finally knock these guys down a peg? This is getting crazy. And I don't think we can look at the politicians for that. And I don't think we can look at the American voter, worker, consumer for that. I think we need to look at the finance and business world.
Look, I think I wouldn't position it as an us versus them or you versus me kind of argument. I think that where the general voter gets a say in it is where they vote and how they vote, if they want this in their backyard or if they don't. And it is incumbent on business professionals in any sector, even if you're running your own electrician company, right? One-man band, to decide and figure out how or if at all you should leverage this technology and how much you're willing to pay for it based on how it improves you running your business. And if it doesn't, you should eschew it and, stay away from it and, eventually peter out at the, ultimate market capitalization of what it figures out. Kind of like what you've seen, I don't know, in the Bitcoin, going back to crypto.
We talked a little bit in the pre-show about the socialism things that are happening. It's just 3 races. At the same time, big time incumbents are going down. Are bankers really scared of these guys?
No.
Or are you guys just being as hyperbolic as people are on every other issue?
No, I think some of the people voting for these candidates are bankers.
Well, there you have it.
No, I mean, I just say that because there is a lot of finance in New York and Denver. I mean, New York is the financial capital of the world. Denver is probably the financial capital of the Mountain West, right? The socialist upsets continue, and they're not exactly a surprise. They're being driven by the inflationary outlook.
It's looking good for the DSA folks right now. Like, I know, you can feel about them one way or the other, but if you just look at them in terms of good fundamentals as a politician, they're doing great right now. Zohran's
I'd
really
like to see some ideas on what they can actually.
Well, that's what I'm saying. Like we've gotten our first taste of that, right? With Zohran, and it's looking good. Too early to tell, but this is not the disaster that the big New York investors of the world are telling us it's going to be.
No, probably not. But I would say to anybody who's really pissed about the cost of housing where they live, if you're looking at getting involved, state level office or Congress isn't it. Get on your local zoning board.
Our favorite Fed governor, Lisa Cook, is in trouble once again.
You mentioned that War might not determine as other people on the Fed, obviously. So has Lisa Cook on the Fed. The Supreme Court ruled on Monday. I'm not really sure exactly whether it was on the merits or whether it was procedure, but I think you said that
procedure.
Yeah, you're going to take the appropriate action when the time comes. What could you do to get rid of?
Get her off.
How would you do it at this point?
By winning the case. Yeah, they sent it back, not based on the merits. They sent it back on process and procedure.
Mm-hmm.
So we'll start the process and we'll do perfect processing. perfect procedure.
We know he's going to try it. He's going to try it on a slow news day when he's trying to distract from some other calamity. It's going to get the market's attention.
Yeah.
We're starting from square one, right? The market's going to treat this as a nothing burger. And then he's going to ratchet up the pressure on Warsh again. Maybe he brings back the renovation stuff. And then we're going to be right where we were. And once again, I'm begging the finance world to put a stop to this once and for all. You guys have the power.
And we'll see Jay Powell hang around through 2028.
That's right.
What if I told you Jay Powell was financing Lisa Cook's legal defense?
Is that true?
I can't say it's true or not.
I bet that's not true just because they're both the type that wouldn't want that sort of...
What, you're saying these guys have ethics?
Look, this sucks, man.
Yeah, it does. And it's an example of the court giving him a way out and offering it and him just not taking it. It's interesting to me how we've become okay with disregarding precedent. The firing of commissioners has been around since 1930. And people climbing over to themselves to say that that's okay, and it ultimately going to the Supreme Court and then ruling that that's okay. I don't know.
The irony that these folks call themselves conservative.
Oh, it's performative conservatism at this point.
The amount of precedents that have been overturned in the last 10 years is insane. This is a radical upheaval in American politics. But at the same time, to me, what I think is going on politically is that people are tired of what's happening. They're hoping for any sort of inkling that something might break things in a positive direction. And so they're doing sort of the mental math of saying, is the benefit of being a stickler, is the benefit of that bigger than the negative, than having to go through being the bad guy? And nobody's saying it's worth it. Not because nobody wants to be the bad guy, nobody wants to be the stickler, nobody wants to hold folks' feet to the fire. It's because they don't think it's actually going to make a difference, that enforcing this one rule is actually going to change anything for anybody anytime soon. And so, but, at the same time, that's why I think DSA folks are winning, because folks are just willing to give anything a shot right now. They gave the moderates a shot. They gave the fascists a shot. They both blew up in their faces.
All of this under the economic backdrop we described, which is pretty good. I mean, we're voting for socialists in the financial capital of the world and in Denver, while real GDP is running at 3%. And they're putting rent freezes on in New York because everybody's climbing over to themselves to try to live there.
Well, and that's because we have a communist president who's nationalizing.
Taking equity stakes, financial stakes in the companies in lieu of things that actually make stuff. It's just money on paper. I mean, what is it? He's running the government. What is the U.S. government, a hedge fund?
Things are going well, and the president's economic regime is siphoning all of the profits off to the richest people.
Or to himself. Look at the crypto bros who catered to this guy. They haven't won anything from this over the last 2 years. You know who has? Him. His kids, evidently.
And so even if you want to come on here and make well-rationed arguments and show us the graphs and talk us through all the ways and, do all the qualifications of how you might not be feeling this and it's okay if you don't agree with this, but technically we still got to hand it to the economy. It's still doing well. That's all well and good, and that's why we're having this conversation, and I hope people feel better informed for it, but you're not going to get the consent of the voters.
I shouldn't. I'm not giving you solutions to bring down inflation. I'm not the one tasked with doing that. I'll give you solutions. I'm not sure the electorate's willing to accept those solutions.
But if an economy does not have the consent of the voters, doesn't that in some way, by definition, mean that we can't call it a good economy?
Yeah, for sure. I mean, and that's a really nasty thing, right? What is America without an economy that has the consent of its participants? That's kind of a fundamental bedrock of Americana, isn't it? That we are the economy and the economy is us.
Well, I will let you have the last word on that. Thank you so much, everybody, for listening to Is It Bad for the Economy? We hope you had a great 4th of July. We record this on Friday. It's coming in on Wednesday, so we'll certainly be partying this weekend and staying as cool as we possibly can. Please, 5-star review, send it to a friend or family. We keep growing just a little bit, and folks keep hanging around. We know you're loving it. We're getting more and more feedback, but help us grow this thing as fast as we can. We'll see you in 2 weeks. Thank you so much.
You got some editing to do.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things that way. There is a period of transition. It takes a little time